US oil spot. Now, on the US oil spot, we have quite an interesting position running right now as we are in profit of over 100 pips in profit as price action moves significantly well to the downside. So since the beginning of this week, we have been selling the US oil spot. Now, before we go into the details of what our expectations will look like, I would like to refresh our memories on how the week started for us and what led to the idea of selling the US oil spot. And of course, for those who are not part of our live session, on Monday, you have the privilege of being on the same page with us. So right here on the 1 hour time frame, after we did a top-down analysis on the higher time frame, we were able to identify a simple setup that we agreed to be using to guide our trading activities, at least for the first half of the week. And one of the things we came up with at the beginning of this week was the fact that price action was initially confined within that range between the $82.50 level and of course the $81.40 area to further reflect the level of indecision in this particular market. And in fact, this lasted about 24 to 36 hours before we begin to see some bearish traction. Now, you know how we do it in this community whenever we have this kind of flat range. We want to remain patient waiting for a signal which will either come in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And obviously, as you will see on your screen right now, we finally saw the breakdown of that support line. Price came back to retest the structure to give us our first sell position for the week. And one interesting thing about the sell position is the fact that this is the first time price will be breaking down the ascending trend line we identified on the 4 hours time frame, which of course has been supporting this bullish momentum in the last 6, 7 to 8 weeks now. Now, with this situation we have right here, so we have about 100 pips in profit at this point in time. And for those who still have a sell position running at this point, you know how we do it. The next thing we want to be doing right now is to move all stop losses to secure this current position. And of course, from the way things are looking at this moment, I'm of the opinion that we need to give enough room for price action to breathe. So I am suggesting that anywhere around the $81 area and of course the $80.60 level seems most appropriate to move all stop losses to. And as a result of this, we are also giving enough room for price action to breathe, with the hopes that price action may do some couple of retests of retracements before the trend continuation to the downside happens. So now, with a well secured position, well done to everyone who has been part of this profitable journey. So now the next thing we are going to be doing right now is to try and see what to do today. How do we intend to manage our position on the US oil spot going forward? Well, while trying to dissect the current market structure, I was able to identify a simple setup this morning. But before we go into the details on that one, I would like us to have an holistic perspective of what is really going on in this market from a long-term view. Now, in that regard, we shall be scaling up into the 4 hours time frame. And right here on the 4 hours time frame, this was what we came up with at the beginning of the week. Now, the first thing we observed here is the fact that price action has been bullish after taking into consideration the nature of price action since the beginning of the month of July. And to further buttress this bullish momentum, remember we connected the series of higher lows, which gave us this ascending trend line, which has been supporting the bullish momentum and of course has been guiding our trading activities ever since the beginning of the month of July. Now, if we zoom into the current structure, if you recall vividly, for those who are part of our live session, we were able to spot a key level at the $82 area at the beginning of the week, which also shares a beautiful confluence with that ascending trend line we identified earlier. And of course, we know how we use our key level in this community. As long as price action breaks down our key level, we want to be looking out for patterns and structures that will support the idea of selling. And with the case scenario we have on the US All Sports, we finally saw the breakdown and retest of both our key level and that descending trend line. Sorry, and that ascending trend line to give us that our first sell position we are in right now. Now, looking at the way things are going right now, you will see that price is back at a very, very important level, which is the $80 mark. So, despite the strong bearish impulsive leg we saw yesterday, we saw that as soon as price got into the $80 area, we begin to see some buying pressure resume around that area, though isn't yet confirmed, as there is a little bit of consolidation phase around that area. Now, one thing about the $80 level is that it has been a major determinant of price action since the last week of the month of July. As you will see, it was a selling niche here before it was broken to the upside here. We saw the breakdown happen here. We saw breakout again, and since that moment, price action has remained above the $80 mark. And look at what happened when price came back into the structure yesterday. We saw buy pressure resume around that level. Now, with the information we have gathered on the 4 hours time frame, it is quite clear that we are at a very crucial moment in the market right now, as seeing the continued buy pressure around the $80 mark. Now, the next question we are going to be asking at this point is, are we going to see a situation where the buy pressure here will continue just like it had been doing in the past on the $80 level to incite an uptrend scenario, probably to retest the ascending trend line that was broken to incite a downtrend scenario? So that is one perspective to which we are going to be looking at the US All Spot for today. Then the other scenario here is a potential breakdown of the $80 mark, retest of structure to incite for the sell-off in this market. So you would agree with me that the $80 mark is going to be our center of focus for today. But in order to be able to have a better perspective of what is really going on around that area, we would need to scale back down into the 1 hour time frame so we can see how participants in this market has been reacting or relating to that price level. Now, from a fundamental aspect as well, we also need to consider the OPEC Plus members, um, the effect of the decisions they've been making so far in the last couple of months. Remember, for every seminar or meeting they've been having, they've been trying to artificially increase the demand of oil prices by cutting oil production at every point in time. And one of their targets is the $80 mark area, where they want that platform to be a support level for higher highs in this market. And in considering that fundamental aspect too as well, it is quite clear that we are within a very crucial moment in this particular market. We are depending on how price action reacts to this level will determine where price action is likely going to be heading for the second half of the week. Now, with this information we have right here, let's scale down into the 1 hour time frame to see how we want to position ourselves ahead of today's trading session. Now, one of the key parameters I was able to note here this morning was the fact that as soon as price tested the $80 area, we saw the situation where price action appeared to have transitioned into a range bound trading activity, where price is currently confined within the $80.60 level and of course the $80 area, to give us an insight into the level of indecision at this point. Now, this range we have here, you know how we do it. Whenever price action falls into this kind of range, we want to wait patiently to for this indecision to dissolve, to give us a signal of where price action will be going, which of course will come in the form of either a breakdown of the support line for selling opportunities or the breakout of the resistance line of that range for buying opportunities. And one more thing about the structure, if we consider the impulsive move that led us to this point, is that the tendency of a trend continuation pattern increases, as this whole structure could transition into a trend continuation pattern in the form of either a bearish rectangle, a pennant, or a flag pattern to incite a sell-off in this particular market. So with this scenario, with these expectations in mind, we shall be looking out for more selling opportunities if price action goes on to break down and retest the $80 mark. Now, there are two ways to which we can capitalize on this opportunity. Now, the first one is for those of us who are already profitable on the US All Spot. That is for those who took advantage of the sell position we are in right now. Then you can afford to leverage on the profit you had made so far to test waters below the $80 mark if the sell position there will click. So as a result of this, you can afford to have a sell stop order below the $80 area. Just looking forward to more opportunities to maximize that move and ensure that your stop losses are in place anywhere around the resistance level of that range seems most appropriate for a stop loss on this one, which will be dovetailing to between 45 to 55 pips stop loss on this position. Now, in as much as we're looking out for selling opportunities in this particular market, you know how we do it in this community. We cannot ignore the potentials of buyers too as well. Has this range we have here could still transition into a reversal pattern, probably in the form of a double bottom structure, as you will see here. Now, if you look at this closely, you will see that the lowest point where price action has been for this week is along the $80 mark, and the previous low here, the next low here, appears not to be able to break down the previous low, hereby giving us a higher low to work with. And what this simply means, when we begin to see higher lows on our current market structure, it is a clear sign that buyers are gradually gaining momentum behind the scenes. So with this information in hand, we might likely be seeing a reversal pattern, and when we have a potential reversal pattern, we want to be identifying a neckline which we shall be using to validate the potency of that reversal pattern. So we have our neckline situated at the $80.60 level, which of course also shares a confluence with the resistance line of that range. So at this point in time, I want to see price break out, retest the $80.60 level to start considering buying or joining a reversal pattern from this point in time. So we shall be looking out for buying opportunities above the $80.60 level. Now, there is a caveat to this buying opportunity. In as much as we are buying this above the $80.60 level, it is very important that we note here that this is a counter trend opportunity. And one of the other things we need to take into consideration is the fact that price action still remains below that descending trend line we identified at the beginning of the week. And you know that when price remains below the descending trend line, we of course want to be looking out for selling opportunities. But in this case scenario, if price breaks out, we could likely see a reversal pattern happen. And now when we join that bullish momentum, we want to be very, very careful as to see how the price will react to this descending trend line, which also shares a beautiful confluence with the $81.40 level. So now, depending on how price reacts to this confluence here, will now determine if we are going to be adding more buy position to our existing trade or getting ready to join the downtrend continuation. So there are two things we can look out for here. The first one is the breakout retest of this confluence to give us an opportunity to buy. That is one way to look at it when price gets into that zone. Or the other scenario is if we continue to see selling pressure as buyers find it difficult to break out of that descending trend line, then we might likely be seeing a downtrend continuation of the previous impulse leg. So these are my views here on the US All Spot for today. It's a very simple setup where our center of focus basically is within the $80.60 level, and if we have a breakout of the resistance line, we look out for buying opportunity, where I told us all that we shall be waiting to see how the market reacts to the $81.40 level to decide if we are going to be adding more buy position or getting ready to join a downtrend continuation. And then I said here that a breakdown retest of the $80 mark will be welcoming selling opportunities. So let's mark these levels out on our chart, as we will be needing them to as a reference point to guide our independent trading decisions for today. So if you have any questions regarding the current market structure, or probably you need me to do some clarification on what I said, feel free to let me know in the comment section.